Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. We're going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report. And tonight's headline, British pound shows signs of an important bottom. A drop below 136.80 is still a possibility for the pound dollar in mid-2009, but there are signs that at least a multi-month low is in place. An in-depth look at the technical considerations suggests that the mid-160s could be reached in the first quarter of 2009. So this is an article from Jamie, a little longer term in focus in terms of the British pound. So I'm going to go ahead and pull up the charts. The last chart I get to will be the British pound, and I'm going to go over some of the things that he mentions in the article. So it's an in-depth report, and I certainly suggest and recommend everybody listening to click on that link just above the video and take a look at the article yourself. So let's go ahead and pull up the charts. The first chart is, let me get this straight, is the euro dollar, and we can see this is the trade from last week, the breakout above the 130.85 area. I just want you to keep this in mind as I get later on to the Kiwi dollar, because there could be a similar breakout trade in the Kiwi, so that's something I want to focus on. Moving forward, as I mentioned in the last couple of reports, the one you might take a little bit of profits up here, but the major resistance level is just beneath the 136 figure moving forward. Short term, and this is a very short term trade, just in case you didn't get an entry on that, I would consider the previous trade, the breakout for 130.85, as a more longer term trade. We do have a breakout here on the Sunday Open above that 34 figure. What we might do over the next few hours, and again, this is a short-term trade idea, we might wait for a back test of this line. We can call that line 34.15, possibly looking for an entry around that 34.15 area, maybe a stop 50 pips or so beneath it. But again, this is a very short-term resistance line that was broken, a very short-term breakout as well. So keep that in mind, keep the wrist tight, and wait for that perfect entry, which right now would be around 34.15, and keep in mind that anything can happen, and we might, we might be stopped out. There's a good possibility, but again, that area could act as support moving forward short term. The next chart is the Kiwi dollar, as I mentioned, and this is the daily chart first, and this is the resistance line that I've been using for the past few reports, and I was waiting for a back test of that line. Prices did get close to it, not close enough for me personally to enter, but maybe you at home were able to enter. So let me go ahead and pull up this is the 60-minute chart, and this is what I wanted to focus on in terms of the similarities compared to that euro breakout trade, and what we might, how we might, look for entries in this pair moving forward, assuming we didn't get an entry on the backside of that former resistance line. We're now expecting to act as support. So this could be the breakout area, maybe a move above that 56 figure. So that's something we can keep on the radar over the next, into tonight and tomorrow as well. Maybe a breakout above that 56 figure. Wait for a close above 56 on the hourly, and then possibly look to enter on a back test, testing from the opposite side, the previous resistance line we might now expect to act as support. But again, similar to the euro-dollar trade, this is a little longer term in focus, but it is still a short-term trading idea, so you have to be ready, for the market to completely ignore your analysis, and that's why, risk, a stop placement is obviously the most important thing. So moving forward now, the pound dollar, and this is what Jamie was speaking about in his report, and there's actually a separate paragraph about this specific technical factor right here, which is the shorter term support line. Jamie was mentioning that we had a false break beneath it, and that's this area right here, and he was mentioning how that is a bullish sign, and I agree wholeheartedly. So moving forward now, assuming you're listening to this report for the first time, what I would suggest is possibly draw this line, and let me give you a longer term view so you can see it a little more clearly in terms of, this is the low right here, the 12.4 low, and this is actually starting from the 12.6 low, the line there. And what we might do over the next few hours is possibly wait for a move back down to this support line. We might look to enter just above that support line with a stop, maybe 50 pips or so beneath it. So, but again, another short-term trade idea, so keep the risk tight. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.